I'm going to be covering 6 crashes that happened in the market between 1980 and 2021. So I'm going to start first on the right side, and I'm going to cover the top of the market and the bottom of the market. And the top of the market shown in green and the bottom market shown in red. So you can see from the March sell-off from 2020, we had in green we were at 0.37, and then we went to 0.59, and then the crash was over. But it was a lot different when we were in the 2008 range, and we were at 0.53 at the top of the market, and then we went all the way up to 2.76 where the bottom of the market was at. And you saw similar behavior for the dot-com crash when we were at negative 0.23 at the top of the market and at 2.45 at the bottom of the market in red for the dot-com crash. And then you can see for the 1990, we went from 0.97 for the top of the market to 1.45 for the bottom of the market. And the crash of 1987, which is not necessarily associated with the yield curve inversion. This, I believe, had to do with high bond yields, but it still counts. We went from 2.39 to 3.43. The bottom of the market for 1982 was 3.11. Typically, the bottom of the market is indicated on average at being at 2.875 on the inverted yield curve, but you can see for the March sell-off, we went to 0.59 on the inverted yield curve, and that was the bottom of the market. But in my view, we were just propped up and we weren't allowed to go through the full process of the crash and get to bond yields that were similar to 2.875 before we finished the correction. So in my view, I think it's going to happen eventually. I think it's been delayed. So that's just my perspective on it. We're going to have to see how things go, but currently we do have an overvalued market, so I think it's a time for caution. Typically, when the markets are in a bad place, the first thing the Fed will do is cut interest rates. And you can see the interest rates in red and the inverted yield curve in blue. And I basically made a green line showing where the yield curve inversions happen. And you can see the connection between the yield curve inversion and the cut of interest rates. But what's very interesting to me is the way we prop up the market is by cutting these interest rates. And you can see around 2008, we went from 5% to 0%. And then in 2020, we went to 2.5 to 0%. So our ability to cut interest rates was cut in half. And that makes me wonder if that's going to happen again. And we're only able to possibly cut 1.25% for the next yield curve inversion. So we're steadily deteriorating our ability to prop up markets, and eventually I think that's going to present a challenging time. So it's something worth noting for the long term.